In this episode of the Whiteboard series, we're talking tax forms. They're starting to come out. It's the end of January. You'll have a few more coming probably the next few weeks. What are they? What do the numbers mean? Do you need to keep them or do you need to give them to your tax preparer? Stay tuned to find out more. Hey there, I'm Justin Costelli, CEO of RLS Wealth Management, here with another Whiteboard series video, a series where we take different topics related to financial planning, break it down real quick so you have a better understanding. And today, as you heard, we're talking about tax forms. So it's the end of January. You may have already started receiving some of these. You'll be receiving some of these in the coming weeks as well. And you may not know what do you need to keep, what goes to the CPA, or even what are they. So I took some of the main ones that most people are going to be familiar with and just wanted to run through those real quick. Now this is not a complete list. There are some other ones out there that you might get, and there's obviously other things you're going to need to give to your CPA, but these are going to be documents you're receiving in the mail and that you're going to want to pass on. So the first one is the W-2. If you've been working for any amount of time, you're used to these W-2s. These just track your wages and then your taxes paid. So you just give that to your CPA, they enter all of that in, or you do it yourself on whatever platform you use. How much you made, how much you paid in taxes, pretty simple, pretty easy. Next up is going to be a 1099, and there are a variety of 1099s. They'll have a little letter next to it telling you what kind of 1099 it is. The first one you might see is a 1099B, and that is just for, as I've listed here, capital gains and losses. So if you've bought and sold investments inside of a non-retirement account, expect to get a 1099B showing if you've made money or lost money to report for purposes. So if you did some tax loss harvesting at the end of the year as the market went down, then you will have this 1099B showing the losses that you've taken to offset any gains or carry forward. So make sure your CPA gets that. Next up is going to be a 1099 div, so a little bit more than just one letter, but this is for dividends and capital gains distributions from like your mutual funds. So again, in a non-retirement account, a taxable account, mutual funds are required to pay out cap gains distributions at the end of the year. These are these unexpected distributions you get and you get taxed on, which is why ETFs are so loved inside of a non-retirement account. But I digress. So back to this form. It's going to be showing you the dividends and capital gains you got from your funds. Again, another one that needs to go to the CPA so you can pay taxes on those distributions. A 1099 INT for interest. This is your interest income from bonds that you may hold in the same thing, a non-retirement account. You keep on saying non-retirement account. Your IRAs, 401ks, 529s, all these deferred accounts, you're not getting distribution forms for those, but you would get a 1099R if you have one of those. So a 1099R is a distribution from a retirement account. So if you're taking money from an IRA, if you take one from a 401k, if you do a rollover of a retirement plan to an IRA, you will get a 1099R showing that there was a distribution and what the taxable amount was and what taxes were withheld if need be. So even if you do a rollover, it's not a taxable event, but it gets reported to the IRS, you'll get a 1099R. A little fun fact, if you do an IRA transfer from IRA to IRA, you will not get one of these forms. I know that's a lot of confusion that comes up sometimes. So those are your 1099s. As I mentioned, there are some other ones that are out there, but those are the main ones that most of us are going to be seeing and receiving. Going to give those to your CPA. Next up, some of you may get a K1, which is a partnership distribution. So maybe you're in a business that's a partnership. Maybe you have an investment, sometimes in the oil or commodity investment field. You get a K1, which is a partnership distribution. You have to give that to your CPA. These are an extra cost. It's an extra form that has to be filed, so they usually bear an additional cost when it comes to get your preparation done. But that's what a K1 is. It's a partnership distribution. If you're using mutual funds, ETFs, chances are you're not going to get one. There are a few mutual funds out there that do issue K1s, but if you've had that for a while, you're probably used to getting those. Most of us probably won't get the K1. The last form I want to go over is the form 5498, and this is for anybody who has an IRA and made a contribution to it, a rollover, RMDs. You'll get this 5498. Now this is not a form that has to go to your CPA, and usually you will get it after you've already filed your taxes. So I'll always get calls, even though we talk about it, in a panic that I just got this form, I've already turned in my taxes, what do? Well, the 5498 is really more of just a record-keeping form to give proof to what you reported to the IRS. So you're going to report to your CPA or your accountant how much you contributed to a Roth IRA, for instance. This 5498 is going to confirm that. This is just documentation to support that. So you want to hang on to them, but you don't need to wait for it, or if you get it after you turn in your taxes, don't panic. It's okay. You've already given this information to your CPA. This is also an important document for those that are going to be taking their first RMD. That'll be on there as well. So that's the form that I think most people don't realize and don't understand what they're going to get, but it's going to come, it's going to spook you. Hopefully you remember this video and you won't think twice about it. You'll know what it is. Hang on to all of these. Most of them are going to go to your CPA. So a little bit lengthy, but there's a handful of things. I wanted to give you a good definition of everything and what you know and what they are. Again, most of these are going to be coming soon. Your 5498 usually comes in the spring around May or so, after you've already filed your taxes. Don't panic. So thanks for watching. Stay tuned. We'll have more Whiteboard series videos coming in the future. And with that, have a good day.